my husband looked across a conference table at me and said I had contributed nothing to our marriage. He said it the way you'd correct a subordinate, measured, almost bored. His attorney was nodding. Mine was writing something down, and I was sitting there in a gray blazer I'd bought for exactly this kind of room, thinking about a tax form I'd found 6 weeks earlier. A Schedule K1, mailed to our house by accident, sitting on the kitchen counter with a coffee ring on the corner, where I'd set my mug before I understood what I was looking at. The form listed a business I had never heard of. It had my husband's name as a partial interest holder, and the income figure on line 1 did not match anything on the tax returns we had filed together for 6 years. Carter said I contributed nothing. That form said something different. What came out of the next 9 weeks of document work said something much louder. Welcome back to Forensic Family Stories. My name is Renata, and I spent 14 years married to a man who hid $380,000 in income across 3 business accounts while telling everyone who would listen that I was a financial dependent. This is how the paper finally caught up with him. If you have ever been told your work didn't count because it didn't come with a paycheck, drop a comment below and subscribe, because these stories are for people who stayed quiet long enough. Carter Voss was the kind of person who made a good impression so reliably it started to feel like a skill he practiced. He was tall, easy in a room, the sort of man who remembered what you drank and had it ready when you arrived. People liked him without quite knowing why. I had liked him without quite knowing why for a long time. We met when I was 27. I was a corporate controller for a mid-size manufacturing company outside Columbus. He was running business development for a logistics firm, and he was good at it, not brilliant, but relentless and organized in a way that looked like brilliance from a distance. We were married at 29. The first few years were straightforward. 2 incomes, a house in Worthington, all the normal architecture of a life being built. Then Carter started talking about kids, which we'd always planned for, and about how hard it would be to manage 2 demanding careers while raising them properly. His job had started requiring real travel. Mine had started requiring real seniority, which meant real hours. He said something I've replayed probably 1,000 times in the years since: "You're the steadier one, you know. You're the one who makes a home feel like a home." I could hear what it was even then, which is probably why I agreed. I left the controller position at 36. Our son was 3, our daughter was 8 months old. I told myself it was temporary, 2 years, maybe 3, until both kids were in school and the schedule settled down. Carter said the same thing: 2 or 3 years, then you go back if you want to. He knew I wouldn't go back. I think I knew it too. 7 years off a finance career isn't a gap, it's a canyon. The certifications I'd held started expiring. The industry contacts went cold. I spent those years doing what I'd agreed to do: running the house, managing the calendars, handling everything that kept 2 children and 1 professional marriage operational. I was good at it the way I'd been good at my actual job, which is to say I kept meticulous track of everything and nobody noticed. The way things were presented to the world, from the outside, was that Carter supported the family and Renata stayed home. That was the clean version, the one Carter told his colleagues, the one his parents told their friends. His mother once said, in front of me, that Carter was so generous to let me have such a comfortable life. I smiled. I filed it. I had learned by then that Carter's family ran on a specific kind of loyalty that required you to accept the story as it had been told and not ask about the revision history. I did not know yet how much revision there was. The Schedule K1 arrived on a Tuesday in March. I remember because it was a Tuesday I'd spent mostly on the phone with the pediatrician about our son's allergy tests, and I was tired in the particular way you get tired when a whole day's effort produces nothing you can hold in your hand. The mail was on the kitchen counter when I got to it. Carter was in Charlotte that week, which meant I sorted everything. I'd been sorting everything for years. Most of it was routine. I almost set the K1 aside for him without opening it, the way I'd been trained to treat anything with his name on it as his business and not mine, but it was addressed to both of us. The tax ID number on the front matched our joint returns format, and the entity name in the upper left corner, Voss Capital LLC, I had never heard of. I opened it. The income figure on line 1 was $63,400 for the tax year listed. I stood at the counter and read it twice. That number should have appeared somewhere on our joint return, because my husband's interest in this company meant it passed through to our household income. I knew how K1s worked. I knew how pass-through taxation worked. That was not theoretical knowledge for me. It was the specific kind of thing I used to do professionally. I went to our filing cabinet and pulled the prior year's return, then the year before that, then 3 more. Sat down at the kitchen table and went through them the way you go through a patient's chart when the numbers stopped adding up. The name Voss Capital did not appear anywhere. None of the attached schedules showed any income from that entity. Whatever this business was, it had been deliberately excluded from 5 years of joint returns. I put my coffee mug down on the K1. That's where the ring came from, the one still on the corner of the page. I wasn't thinking about preserving evidence. I was thinking that I needed to understand what I was looking at before I said a single word to anyone. Carter called that evening from Charlotte. He asked how the kids were. I said fine. He asked how my day was. I said fine. Neither of us said anything about the mail. He didn't know I'd found it yet. I didn't tell him. I just thanked him for calling and said I'd talk to him tomorrow. That night I sat in the kitchen after the kids were in bed, and I wrote down every question I had on a yellow legal pad. There were 11 of them. By the time I was done writing, I already knew approximately where the answers were going to live. Here is the thing about financial fraud that people who don't work in finance sometimes miss. It isn't usually hidden in one dramatic place. It lives in the difference between two numbers that should be the same and aren't. I spent the next 3 weeks pulling every financial document I could access from our joint records, tax returns going back 6 years, our mortgage statements, Carter's W-2s, the 1099s he'd received from his primary employer, our joint bank statements for the same period. I organized them on the dining room table after the kids went to school, the way I used to organize audit files, which is to say in date order, labeled, with a running summary sheet I updated every time I found something new. The summary sheet got crowded fast. Carter's reported income across those 6 years was consistent. His W-2s showed what they showed. The joint returns looked clean to anyone reading them normally. But once I started tracing his actual deposits against what should have been flowing in from all sources, including whatever interest he held in the LLC that had just mailed us a K-1, the picture got strange. The deposits into our joint account averaged slightly below what his W-2s alone could account for, which meant some of his income was going somewhere before it reached the joint account. I hadn't noticed this before because I hadn't been looking. I'd been managing the household budget from what came in, and what came in had always been enough to keep things running without strain. But now I was looking, and the outbound trail was right there, quiet and deliberate across 6 years of statements. I needed the business records to know how much. I didn't have them. Not yet, screws, if you've ever had a number not match and sat with it long enough to understand what it meant. The number is usually trying to tell you something. What I did next was the same thing I would have done for any client who walked into my office with a document they didn't understand. I picked up the phone and I called an attorney. The attorney's name was Bet Harlow. She had offices in a converted Victorian on 5th Avenue in Columbus, the kind that used to be a house and still smelled like one, wool carpet and old window wood. She'd been doing divorce and asset work for 22 years. A colleague of mine from before my career break had used her during her own split and said, Bet was the one you called when you thought there was money somewhere they didn't want you finding. I brought the K-1 and the tax returns. I explained what I did before I stopped working. She listened the way experienced people listen, not nodding too much, not writing everything down, just absorbing. When I was done, she asked me 2 questions. First, did I have reason to believe there were other entities? Second, how was the divorce proceeding generally? Carter had filed in January. The divorce had been filed. That was almost its own story, and I'll get to it. His petition characterized our assets in a specific way. His attorney had sent over a financial disclosure form in early February that listed his income at a figure I now had reason to believe was substantially understated. To Bet's first question, yes, I thought there were others. The Vostomon entity had Damon in the name, Carter's brother, who ran a small commercial real estate operation in Columbus. The two of them had always been close, the kind of close that operates on its own frequency, where loyalty gets expressed in the details rather than out loud. I'd never thought much of it. I should have thought more. Bet referred me to a forensic accountant she used regularly. His name was Philip Stokes. He drove a sensible car and kept an office that looked like a filing system had eaten a desk. He asked for 60 days in the K-1 and whatever I could access from our joint records. He said to stop using the phrase hidden accounts for now, and to just call them unreported assets until we knew what we were looking at. I appreciated the precision. That's usually a good sign in a financial professional. The first thing Philip found took him 11 days. A second LLC, Voss Meridian Property Group, registered in Delaware, filed 6 years ago. Carter held a 40% interest. Damon held the other 60%. The entity had never appeared on a joint tax return. Philip cross-referenced it against public county records for commercial property transactions and found 3 transactions in 6 years that touched the entity's address. The cash flows from those transactions didn't make it back to any account Carter had disclosed. I drove home from Philip's office that afternoon and sat in the driveway for a while before going inside. My son had soccer practice at 5:15. I made dinner. I helped with homework. I did not say a word to Carter when he called that evening, which he did, because we had slipped into the strange politeness of separated people who still share children and haven't yet agreed on how hostile to be. He asked how my day was. I said fine, same as always. That was the last time I said fine and meant it as a complete answer. The paperwork to formalize the separation had been moving through the system since January, which meant by April we were approaching the mediation phase. Carter's attorney had sent a letter outlining what Carter considered a fair division of assets based on his disclosure form. The letter was 5 pages and contained the word equitable 9 times, which is the word people reach for when they mean favorable to themselves. Carter had retained Alan Briggs, an attorney I'd seen mentioned in business circles, and who had a reputation for being methodical and unemotional. Alan's strategy, as far as I could read it from his correspondence, was to establish as quickly as possible that the primary marital asset was the family home, and that Carter's income, given my 7-year career gap, represented the dominant economic contribution to the marriage. There was a call in April. Carter, me, both attorneys, the mediator on the line. Carter's tone was the tone I'd known for years, confident but wrapped in something that passed for reasonableness. The kind of voice that makes its cruelty sound like it's doing you a favor. He said, Renata hasn't worked in 7 years. Whatever she contributed, it wasn't financial. I think we both know that I wrote it down, not because I would use it that day, because in my experience with documents, the things people say before they know what you know are the most useful things they ever say. His attorney had submitted a second financial disclosure by then. The second one matched the first, which matched nothing Philip was finding. 2 disclosures, no mention of any LLC, no mention of any income outside the W-2, and a single small dividend from a brokerage account we both already knew about. Philip had found a third entity by then, VD Holdings, registered in Ohio, 4 years old. Damon listed as the sole member, but with Carter as an authorized signatory on the business banking account. That account had received $204,000 in transfers over 4 years. Philip was still tracing where the money went from there, but the initial picture was becoming clear. The income hadn't disappeared. It had been rerouted through Damon's business infrastructure and parked somewhere Carter could access when the divorce was over. I asked Philip to put everything into a format I could present in mediation. He said he could have a draft within 10 days. I said that was fine. In the meantime, there was a piece of this I needed to handle personally. I called Damon. I want to be honest that this was not a smart tactical decision. Bet it would have told me not to if I'd asked her, which I didn't. But I had known Damon for 14 years, and some part of me needed to hear what he would say when I asked him directly. He answered on the second ring. His voice was careful in a way it had never been with me before, which told me Carter had already called him. Damon, I said. I got a K-1 in the mail. For Vos Damon Capital there was a pause. One of those pauses where you can hear someone arranging their face. That was just a small business thing, he said. Nothing significant. How long has it existed? Another pause. Renata, Carter and I do business together sometimes. That's not unusual. Is he a member of VD Holdings? I could hear him working out how much I knew. Carter handles some things through my company, he said. That's between us as brothers. I don't think you need to get into the details of that. I told him I already had the details, which wasn't quite true yet, but close enough. He said, "You're making this into something it isn't." I said, "The filings will tell me what it is." He hung up before I did. That was the last conversation I had with Damon before mediation. The document that finally made everything legible wasn't the LLCs. It was the bank records. Philip had subpoenaed the business banking statements for all 3 entities through the divorce discovery process, once Bet filed the formal request. The statements came back on a Thursday morning in 2 thick accordion folders, the kind that close with a rubber band and an elastic tab. Philip called me in to review them. He had already sorted them chronologically and built a summary spreadsheet. He is the kind of accountant who color codes things. I found this comforting. We sat in his office for 2 hours going through the spreadsheet column by column. The total across all 3 entities over 6 years attributable to Carter's interest came to $380,000. That was the number. $380,000 of income that should have appeared on 6 years of joint tax returns and had appeared on none of them. Philip walked me through the routing. The money came into the entities from legitimate business activity, real transactions, real clients, real commercial leases. But then it moved. Small transfers, dispersed timing, nothing large enough to look dramatic in cessation. Some of it went directly to Damon, some of it sat in the VD Holdings account, and a meaningful portion had been moving over the past 2 years into a savings account, in Carter's name alone, that had been opened at a bank we did not jointly use, and that had never appeared on any disclosure. That was the account I hadn't known existed. The one behind all the ones I did. Philip called it the terminal account. The place where the routed money eventually rested. The balance at the time we pulled records was $148,000. That was what was left after whatever Carter had already planned to do with the rest of it. I sat with that number for a minute. Then I asked Philip what he would call this in a formal context. He adjusted his glasses. He said, in a divorce proceeding, this is undisclosed marital income and potentially fraudulent financial disclosure. In a broader legal context, depending on how the routing was structured and whether tax returns were filed incorrectly as a result, there are other words for it. He said he would leave those words to the attorneys. He printed the summary document. It was 6 pages. The first page had one number at the top, $380,000. Beneath it was a 12-month breakdown of transactions, color-coded by entity. It was the clearest financial document I had seen in 9 weeks of digging, and I had built pivot tables for Fortune 500 audits. Philip knew how to organize information for a room that needed to understand it quickly. I took the accordion folders home and read every statement that night after the kids were in bed, not because I needed more evidence, because I had spent 7 years being told I didn't understand the finances of my own household, and I wanted to understand them completely before I walked into that mediation room. I understood them completely before midnight. If your family has ever told you that you don't need to worry about the money, subscribe. Because in my experience, the only reason someone says that is so you won't look at it. Mediation was scheduled for a Wednesday in May. The conference room was on the 15th floor of a downtown building, the kind that has water in a glass pitcher and extra chairs nobody uses. Both attorneys were there. The mediator, a retired judge named Carla Simmons, who had the particular stillness of someone who had heard every version of every lie, was at the head of the table. Carter arrived 4 minutes late. He came in the way he always came into rooms, with the adjusting energy of a man who expects to set the temperature once he gets there. He sat across from me and straightened his jacket and looked at me the way he had been looking at me since January, which was with the careful blankness of someone who has already decided they're right. His attorney presented first, the same framework they'd been building since January. 7-year career gap, no current income, primary breadwinner, equitable division should reflect the economic reality of the marriage. Carter said at one point unprompted, I just want this to be fair. I've always wanted that. Renata and I both know she's been supported by my income for a long time. Bet waited until Alan was done. Then she said, we have some additional financial information we'd like to introduce to the mediation. She looked at me. I opened the folder. I have done this in client work enough times to know that the way you present financial documentation matters. You don't lead with the total, you build to it. You want the room to arrive at the number through evidence, so it doesn't feel like an accusation. It feels like arithmetic. I started with the K1. The one with the coffee ring. This document arrived at our marital residence in March, I said. It references an entity that appears nowhere in my husband's financial disclosure. I'd like to introduce it as Exhibit A. Carter's attorney wrote something on his notepad. Carter's face stayed where it was, but his hands shifted. I introduced Exhibit B, the corporate registration for Voss Damon Capital LLC, pulled from the Ohio Secretary of State's records, showing Carter as a 60% interest holder. Exhibit C, Voss Meridian Property Group, Delaware registration, Carter at 40%. Exhibit DVD Holdings, Ohio registration, Damon as member. Carter as authorized signatory. With each document I set on the table, I watched Alan Briggs's expression adjust in small degrees from composed to calculating. He was doing what good attorneys do in the moment the opposing side's evidence arrives, figuring out how much damage control was still possible. Carter said, those are business arrangements between my brother and me. They don't affect marital assets. The mediator looked at him. She said, Mr. Voss, you may want to let your attorney respond to that. Alan put his hand on Carter's arm. I introduced Philip's summary. The 6 pages, the $380,000 across 6 years, the color-coded entity breakdown, the terminal account holding $148,000 that had never appeared on any disclosure. I set the pages in the center of the table and pushed them across to the mediator. She looked at the first page for about 15 seconds. Then she looked at Carter. Carter looked at his attorney. Alan looked at the documents. The room was quiet in the particular way rooms go quiet when everyone in them is recalculating at the same time. Carter had 2 moves left. I'd watched him long enough to know both of them. The first was to reframe it as something technical and boring that didn't mean what it appeared to mean. He tried that. He said the business accounts were structured by an accountant. He actually used that phrase, structured by an accountant, as if that were an explanation rather than a description. He said the income was reinvested in the entities, that it wasn't income they'd actually received yet. Alan tried to build briefly on that, something about timing of distributions, but the mediator stopped him before he got far. She said, the tax obligations from those entities were still marital obligations. Undisclosed income affecting marital tax liability is a different matter from timing of distributions. Carter's second move was to go quiet and let his attorney manage it, which he did. He sat back and folded his hands and watched Alan talk, and his face went into the neutral register he used when he was deciding what the next version of the story was going to be. Alan asked for a short recess. In the hallway, I stood by the window with Bet. Outside, Columbus was doing what Columbus does in May. Gray sky, the kind that can't decide between rain and just being oppressive. She said Philip's summary was as clean a disclosure gap document as she'd seen in some time. She said we were in a strong position for renegotiation. I said, I want it documented that he said I contributed nothing. She looked at me. I said he said it in April on the call, in front of the mediator and both attorneys. I wrote it down. I want whatever comes out of today to reflect that the characterization of my contribution was based on a financial picture he had deliberately understated. She said she could work with that. When we went back in, Carter's attorney had a new position. It involved characterizing the business income as legitimately structured and suggesting a good faith disclosure amendment that would bring the entities into the marital estate going forward. It was the kind of offer that would have looked reasonable if I'd arrived without Philip's summary document. It would have gotten Carter out of the room with most of what he'd planned to keep. I said no, not to everything. I was not there to be unreasonable. I was there to have the right number on the table. What I wanted was the $380,000 included in the marital estate calculation, the terminal account balance treated as a marital asset, and the disclosure failure formally noted in the mediation record. I also asked that Bet refer the tax discrepancy to a CPA for review of whether the joint returns had been filed incorrectly, because if they had, I needed to know my exposure. That was the part people sometimes forget in cases like this. When a husband files incorrect joint returns, both names are on those returns. Carter went pale when Bet said that last part out loud. Alon asked for another recess. The second recess lasted 40 minutes. I sat smaller room down the hall with a cup of coffee I didn't drink, and Bettis paralegal who was very good at being quiet in a supportive way. I thought about the K1 on the kitchen counter. I thought about the morning I'd found it, standing there in the routine of a Tuesday that had started as all Tuesdays start, unremarkable, already halfway managed. I thought about the years, not with grief exactly, with something more like precision. I had spent 7 years running a household that Carter had used to build an argument. He had let me believe that the division of our labor was temporary and practical, and while I was being temporary and practical, he had been routing money through his brother's shell companies and positioning himself for a divorce where the woman across the table from him had no income and no recent work history, and apparently no idea what the family finances actually looked like. He had been preparing for this conversation for 4 years, maybe longer, and he had believed correctly for most of that time that I wouldn't know what to look for. That was the calculation, that was the specific bet he had made, that I would be easy to dismiss because I had been easy to dismiss for years. I think about that sometimes, the confidence it takes to bet on someone else's ignorance. Carter had watched me manage an entire household for 7 years and concluded from that I was financially unsophisticated. The same skills, the same organized, systematic attention to how resources flow and where they go. He had just decided it didn't count when I was applying it to his children's school calendars instead of a corporate audit. People discount what they don't want to see. When Alan came back in, his demeanor had changed. Not broken, just deflated, the way professional composure deflates when the documentation is too clean to argue around. He said his client was prepared to renegotiate the asset framework. The settlement that came out of that mediation took 3 more weeks to finalize. The $380,000 was included in the marital estate. The terminal account balance was split. The house in Worthington was handled on terms significantly more favorable to me than Carter had proposed in January. Philip's documentation of the disclosure failure was submitted as part of the mediation record, and Bet followed through on the referral to a CPA to review the tax returns. That review is still ongoing as of the time I'm telling you this. Damon was not in the room that day, but he was in the documents. The structure of the LLCs made his involvement impossible to separate from Carter's, and the referral generated by the tax review went to both names. I don't know how that resolves. That's not mine to follow. I followed what I could follow and stopped where my lane ended. There is a version of this story where I stayed quiet, where I took the disclosure form at face value, accepted a settlement based on numbers Carter had carefully arranged, and walked out of the marriage with significantly less than the records showed I was owed. That version existed. I almost lived it. The thing that stopped it was a piece of paper I almost didn't open. I am not someone who talks easily about this kind of thing. I spent 14 years married to a man who was charming and controlled, and very good at making other people feel like they were the ones who didn't understand the situation. That is a particular kind of long-term erosion, the kind that's hard to name while it's happening, because it never comes as a single event. It comes as 100 small adjustments. A dinner where you defer because it's easier. A financial question you stop asking because the answer always makes you feel like you're being naive. A career you step away from because the logic is sound, and the logic is sound, and the logic is sound till you're 7 years away from it and someone across a conference table is using your absence as an argument. I want to say one thing about the career gap. Because Carter's attorneys made a great deal of it, and because I have clients who sit in offices with me now and say variations of the same thing, I gave up working and now I have nothing to show for it. The work I did for 7 years kept 2 children fed and healthy and in school, and emotionally stable through a marriage that was apparently considerably less stable underneath than it looked on the surface. The work I did managed the logistics that allowed Carter's professional life to run without friction. That work doesn't show up on a tax return. It never does. But it shows up in what the other person was free to do while you were doing it. Track that for 6 years and price it properly, and it is not nothing. It is never nothing. Carter said I contributed nothing. The audit disagreed by $380,000. I still have the K1. It's in a folder in my filing cabinet, coffee ring and all. Not as a trophy. I don't think of it that way. More as a reminder that what you find is almost always less about luck than about knowing what you're looking for and being willing to actually look. If you are the organized one, the one who manages everything quietly, the one your family calls reliable and means convenient, this story is for you. The paper trail is yours as much as anyone's, and every lie in a financial record eventually becomes someone else's audit. Subscribe if you've ever been underestimated by the person who was supposed to know you best. Because quiet work leaves a record too. You just have to know where to find it. That's my story. Drop a comment below and tell me what you would have done with that K1 the morning you found it. I'll be reading every single one.